the,
Oh, we're doing so.
Okay,
I go through your committee.
we'll call the meeting to order. And we have with us our auditors. And if you'd introduce yourself and take us through the brochures, we'd appreciate it.
all right. So I'm Angela Janak. I'm the senior audit manager at Annabelle and McKee on the account. I have with me Taylor Green. She's the senior on the account. So she was the person on the ground in the main contact with your people to assist us in doing the audit. Today we'll be going through the financial statements and the report to the board. I'm going to have Taylor start by walking you all through the financial statements. There are two portions of the financial statements, the main portion, and then at the back, there's a separate report for governmental compliance items. Taylor will be going through your financials. I will then go through the compliance information and then the report to the board of directors. So I will let Taylor take it away with the financial statements.
All right, so the much thicker packet is the one we'll start with. So the first page is the independent auditor's report. The first part, the opinion, says we've audited the financial statements, and after any adjustments that were made, we have an unmodified or a clean audit opinion. So the financials as presented, no issues. So next we get into the basis for opinion. Just states that we audited in compliance with government auditing standards and generally accepted auditing standards. Next, there's the other matter, which just brings focus to the fact that we did do a restatement of the prior year, which we'll get into once we kind of get to that section. But we did end up having a restatement. And then the next part gets into the responsibilities of management. The financial statements are the responsibility of management to make sure that they're correct and complete. We prepare them as a service. We assist
in the preparation.
Yes, we assist in the preparation, but management is ultimately responsible for the final financial statements and ensuring that they're complete and accurate. Next is the auditor's responsibilities, which just kind of goes into a more thorough explanation of the steps that we took in exercising our judgment to make sure everything appears correct. Next up on page 3, the required supplementary information. This is what Angelo said earlier, is that required reporting that we have to do as a governmental entity. Just kind of draws your attention that there is supplemental information in the back that is in addition to what you would see in normal financial statements. And then the final page is the other reporting required by government auditing standards. So same thing, required statements that have to be included in addition to the normal financial statements. Once we are completely done and the statements are issued, we'll update the date, add the signature, and finalize these. So the next pages, pages 5 through 8 is the management discussion and analysis, the MD&A. This is actually prepared by Michael, so we don't actually audit it or assert that anything in here is correct. This is completely management's thing. Because we are issuing it with the financial statements, we did go through and double check that the numbers and the tables and things like that that we could verify do tie to the rest of the financial statements. But any other context and information we did not verify. For example, the economic factors on page 7 into page 8, we did not verify any of that information as it is not part of our financial statements regular. So that brings us into the actual statements on page 9. So the statements of net position, or as you would see in a for-profit company, the balance sheet. This goes through your assets. So cash and cash equivalents increased slightly, mostly due to the grant income that was received this year and the sale of the sewer, or I guess transfer of the sewer. There was no pilot receivables at year end, those had all been collected. Fee receivables significantly higher this year, because of the two projects, Dog Solar and Scipio Solar, I believe, are the two large projects. They had paid 25% of those fees prior to year end, and that kind of remaining 75% was outstanding. Next up is the grants receivable. This is all related to the sewer project. Part of our restatement was booking an additional 790,000 in the prior year, which again, Angela is really going to go in depth into that adjustment. Which leaves about 400,000 sitting in receivables as of December 2024. The certificates of deposit, you guys put additional about 250,000 into your CDs this year, so which you'll see in the next page, a lot more interest came in from that. And then prepaid expenses increased. What's sitting in there is $8,600 in legal fees that were prepaid in 2023, which I know Tracy and Michael would have been looking into getting that applied to invoices in 2025, so that that's no longer sitting in prepaids.
Who's the firm? Who do we owe?
I believe-
Sarah speech.
What was the
So that's
like the
not,
project?
so that's not O, that is money to
sorry,
come
but-
back to you.
Yeah.
Come
Yep,
back.
Yep,
yep.
it was, yeah. Sorry.
Go ahead.
So what happened there is, as Justin's firm was sending out invoices, it was also including summary detail from prior amounts. And it was interpreted improperly, so we overpaid by that amount. It's now considered a prepaid expense to be applied.
So we're just.
Yeah.
Letting him work it off.
Yeah.
Okay.
And then also in there is the OCC service contract. It was of $12,500. It was due as of December 31st, 2024. However, it's for the contract service period of 2025. So we reclassed it into prepaids. That adjusting entry was not a material entry, but based on our discussion with Tracy, she said we might as well make it just to make sure everything's correct. But there's no finding related to that reclassification, so. And then long-term admin fee, that's gonna stick on there till about 2028. It's related to the land sale last year. It's the 207,000 is due on the 5th anniversary of the sale date, so that'll be hanging out for a few more years. And then obviously capital assets went down with the sewer project being transferred to the Cayuga County Water Sewer Authority. Pilot payments payable, that's consists of penalties and interest had been accrued as of December 31st. The accounts payable increased related to the sewer project, just a bill coming in that, well, not coming in technically, but amount that was due, although it has not been paid, or I'm not sure if the final amount had been settled for sure yet.
As of December 31st.
Yes. And then you paid off the 400,000 short-term loan in 2024. And then the only other change is in your net position, government, you're required to break it out into unrestricted funds and restricted net invested in capital assets, net of any related debt. So you'll see this year that 331 equals the capital assets because there is no debt. Whereas last year that 1329 is your capital assets less that 400,000 debt. Any questions on that page? Okay. So next page 10, the statements of revenues and expenses. So up top, we have the operating revenue. The administrative fee income was pretty similar to the last year. The gain or loss on the sale of land. So this shows just the net assets of, I believe, 1.9 million from the sewer project, netted with the $400,000 that the Water and Sewer Authority paid. And then the grant income of 549, and then this was the other part of our restatement, which booked an additional 700,000 in grant revenue for the prior year as of 12/31/23. Other major changes, the contract services went up quite a bit with the CCIDA fee share services ending. And interest income increased with those CDs. And then the penalties and pilot interest expense increased in the current year.
And I'll go through that in detail, and I'll go through the penalties and interest in the restatements at the end of the report.
I'm sorry, the contract services,
Yes,
how much did we pay CETA in 24?
Nothing. We didn't pay them anything.
yes, yep, there was nothing in 24, so that's 23 was the contract services of CETA, which I think were maybe around 25,000 a year.
To clarify what
Yes.
Taylor was saying there is in 2023, we paid CETA the base admin fee. And what she was saying is in lieu of paying CETA in fiscal year 24, paying myself, the
Okay,
Velas,
Velas.
MRB,
Okay.
et cetera.
Okay,
Right. I'm sorry.
Yes.
yep.
Any other questions on that page? Okay. So then we go into the statement of changes in net position. So this just kind of shows from December of 2022 all the way to December of 24, the changes in unrestricted and invested in capital assets, net of any related debt. You'll see here, we did the prior period adjustment to book an additional $75,000 through net position. This is similar to your retained earnings that you would see on a for-profit company. That was additional grant revenue for 2022. And then the changes in that position, as you'll see, shown tied to the statement of revenues and the balance sheet. So the statement of cash flows on page 12. So your books are recorded on an accrual basis. This just shows what the actual cash flows are coming in and out of the door during the year. So you'll see the total cash provided by your operating activities was $1 million, 1,019,000. We break this out very similar to how you'd see on your statement of revenues and expenses. The actual cash coming in and out. Then we have the cash flows from investing activities with the additional construction costs, the payments of the loan, proceeds from the sale or the transfer really of construction. Going in and out with the total increase in cash of 412,000. The next page ties out the change in your operating activities and kind of reconciles that accrual basis to the cash. So you can see here the increase in fees receivable. It's not an actual cash increase, so we're subtracting it out of your net income because it's not an actual cash transfer transaction. So we go back through and this ties into that 1,000 as well, so it's more accurately reflecting the balance sheet if you were to look at those numbers. And then we did have a non-cash transaction, which is the 152,000 accounts payable that was recorded as of 12/31 for construction in progress. Booking the additional construction and the payable at year end. Wasn't actually any cash change in hands, so it's not included in these statements. It's just a supplemental note. So you can tie out to your fixed asset flow roll forward in the later statements. So then we go to the notes to the financial statements. So these are pretty identical from year to year. Note 1 is the summary of significant accounting policies. So these are the policies that the agency follows and their general kind of rules and how they treat transactions. The first paragraph gives the organization's background, a brief little description. A basis of accounting that you comply with GASB governmental standards. The basis of presentation is that the entire financial statements are presented in accordance with GASB. The breakdown of the explanation of your net position, how it's designated as restricted, unrestricted, or invested in capital assets. And your revenue recognition policy, which just explains how normal operating activities are when you're recognizing that revenue and deferring it, restricting it, and anything unusual, non-operating. Then it goes through some standard notes, cash, how pilot payments are treated, We did add the fees receivable and I believe the grants receivable notes as well this year, since those were new balance sheet items. And then the capitalization, the capital assets, which is that your policy is that you will capitalize any assets over $500. So 500, what did I say?
Checking.
Oh, yeah, sorry.
Hmm.
And then, again, some various other notes, the concentration, that you're tax exempt, more detail on the pilots and the actual amounts charged during the years. And then we get down to the bottom of page 16, where we state the prior period restatement. This just, again, reiterates what's on the balance sheet and other statements, that grant receivables were understated at 2023 by 790, and revenue was understated by 714 as of 2023. And then we had to restate the net position as of 2022 by the 76,000.
And
Again,
that's
Angela.
essentially an increase in revenue that in 2022 revenue was not reported, that could have been reported. I will go into detail on that. Essentially, for grant accounting, the general rule, if it is an expense reimbursement contract, then the organization has earned the revenue as soon as the expenses have been incurred. So the grants that the organization received payments on in 2024 and has some money owed for 2025, that grant existed. The organization had spent money and therefore was entitled to reimbursement. So therefore could and should have reported revenue. So this prior period restatement is recognizing the revenue related to the expenses that had previously been incurred on those grants.
So then note 2 goes into your long-term administrative fee receivable. This is really just reiterating the land sale that happened in 2023. This note will probably be shortened in the following year, but it will stay on your books through 2028 because of that land sale long-term receivable staying on there. So it will probably be shortened down when you're no longer showing the revenue.
That's full hard.
But yes, that note is the same as last year. The capital assets shows your beginning balance, the additional construction costs that were incurred in the current year, and then that write-off from the sewer project, showing that construction in progress is now 0. And then does detail in that paragraph below about the transfer to the Cayuga County Water and Sewer Authority at year end. So then the final page on my end is the long-term debt and line of credit. Just says no amount was outstanding or drawn on the line of credit at year end, and that the $400,000 loan was paid off during 2024. The grant payable is the Clarity Connect $10,000 that's been sitting on the books for a few years. I believe you guys are waiting for paperwork for them to finally make that payment, but that's sitting on there as well. And then finally, any commitments and contingencies, just in the normal course of business, you're exposed to some risk, and it just says that there may be any, but we don't see anything material that needs to be accrued or disclosed. So then that leads us into the next non-compliance reporting, and Angela will go from there.
Yep. So the next page in your report is the independent auditor's report on internal control over financial reporting and on compliance and other matters on the financial statements. This is required because the organization is a governmental entity. We do reiterate in here that we have presented an unmodified opinion on your financial statements, meaning that the financial statements are materially correct in accordance with governmental accounting standards. We report on your internal control over financial reporting, essentially stating that if we have identified deficiencies in internal control or material weaknesses, that we are required to disclose them to you. And I will go through any and all findings we have there in the next few pages of this report. As for the report on compliance and other matters, that first full paragraph on page 20, as part of obtaining reasonable assurance about the organization's financial statements being free of material misstatement, We performed tests of compliance to certain provisions of laws, regulations, contracts, etc. However, in providing an opinion on compliance with those provisions, it was not an objective or audit. Accordingly, we do not express an opinion. The results disclosed an instance of non-compliance that was required to be reported under governmental auditing standards, and that's described in the accompanying schedules going forward. So the next page 21 is our independent auditors report on compliance, specifically with sections 2327 and 2925 3F of the New York State Public Authorities Law. Essentially, as an industrial development agency, we need to make sure that the organization is complying specifically with IDA laws. And that is also disclosed in our findings going forward. As Taylor mentioned throughout the audit, throughout her presentation, there are some interest and penalties that were accrued related to payments not being made timely. So we'll go through that in the coming pages. So on page 22, we have our schedule of findings and responses. Our first section is your summary of audit results. We express an unmodified opinion on the financial statements. We did identify 2 material weaknesses relating to the audit of the financial statements. Those are included in our report on internal control on the following page. There was 1 instance of non-compliance identified that was material to the financial statements, and we'll go through that as well. So looking at our financial statement findings, the internal control of our financial reporting. Help yourselves to copies of the.
No, they're all right.
Okay.
Yeah, we're good.
Um,
These
So-
guys can get one. He's not a member.
all right. Board members may help themselves to a copy of the report. So for the financial statement findings, we had internal control over financial reporting. So for the year ended December 31st, 2024, during our subsequent disbursement testing, we discovered material expenses not being recorded as payables as of year end. So the effect of that, the agency had understated expenses and payables, and the error was not detected by management. We did identify that during the audit, therefore recommended a adjusting journal entry that management has agreed to post, meaning that after the audit, your financial statements are materially correct. However, there was an internal control deficiency in that an error existed prior to the audit that was not identified by management. So we recommend, so under auditors' recommendations, we believe it's important that proper internal control procedures be established and followed for reporting and processing all expenses. So the organization and management have leeway in how they wish to decide to do that, but essentially there needs to be a set procedure that says when an invoice comes in, it must be recorded at this time. It must be marked as posted. It must be filed in a place that it can be easily found to make sure that everything is posted. Implementing control to make sure that your payables are complete. Our second finding, during our review of grant contracts, we identified receivables that had not been recorded by the agency in proper periods. The effect being that the agency understated revenue and receivables in 2023 and 24, and the error was not detected by management. So we talked about this a little bit already. Grant standards require that revenue recognition be recorded in accordance with the grant. So some grants may say this is an expense reimbursement grant. We will pay you for expenses incurred. Some grants may say this is a lump sum payment. We will give it to you up front. It's for operating. Some grants may say this is a lump sum payment, but really you don't get to keep those funds until the project is complete. So understanding the type of grant an organization has received is very important to make sure that the revenue is being recognized at the correct time. So in the past few years, the organization had received 2 grants that affected these financial statements. One being for approximately $280,000 that the organization could recognize the revenue upon completion of the project. So that revenue was included this year. And the second grant being awarded in 2022. That grant existed that grant was not being paid until completion of the project. However, that grant's language said you will be paid up to 80% of what you have spent. So as you spent it, the organization is earning that money and therefore would be recording a receivable. So that is why there is a prior period restatement in these statements. Our audit procedures include reviewing board meeting minutes, making inquiries of management, checking subsequent cash receipts and disbursements. In this particular case, there was nothing in the audit documentation that we had access to in the prior 2 years that indicated the existence of a grant, and there had been no movement on cash to alert us to this. So having found this year that the cash came in, we got the contract, and your revenue and retained earnings have been updated to reflect increased revenue and increased prior year retained earnings for the amounts that you are entitled to be reimbursed by that granting agency. So we definitely recommend that the agency be aware when they're getting contracts, be tracking them, and just make sure that they are consulting with accountants or other professionals if they're not sure when that revenue should be reported. Our next item, non-compliance material to the financial statements on page 23. The regulations that govern IDAs state that payments in lieu of taxes received by the agency must be paid within 30 days of the cash receipt. During 2024, the agency failed to remit payments due to 6 tax jurisdictions within the required 30-day time frame. The effect, payments in lieu of taxes were delinquent, requiring interest and penalties to be accrued. This was 6 payments to tax jurisdictions. It was related to a single pilot receipt, is that correct?
No,
2?
6.
Okay, so it was a lot of money came in at the same time.
There's actually 2 separate occasions.
Mhm.
Talk about that a little, because I was doing the more in-depth testing of it.
Yes.
So this happened back in March that payments came in, and in March, many checks were cut. But we couldn't really prove that all of those checks went out the door, and it was discovered in June and July, those checks never cleared the bank, and that the original checks had been for the incorrect costs, incorrect amounts. So checks were reissued in June and July. Part of our procedures were if we could verify that those checks had gone out in March, we could have accepted that as you had the intent and you did attempt to spend that or remit that money timely. And it wouldn't have been an issue, but since there wasn't a way to validate that that had happened, we did have to accrue the penalties and interest. And then the second occurrence was it was in November. There was a couple of checks that went out, and then it was just a matter of checks were signed on Thursday, went out on the following Tuesday. But I think over the weekend was where you guys hit that 30-day limit. So it
was
just
missed
enough
by
to,
just 4 days.
yeah,
Had that November instance been the only instance, it wouldn't have hit our criteria for a material non-compliance. Being that the beginning of the year, there was a large amount that was not remitted timely. There's one of 2 factors at play here. It is possible that it was remitted timely. However, there's no documentation to prove that it was. So barring proof to the contrary, we as the auditors have to make the assumption that it was not remitted timely if we do not have proof to say it was. That it was.
The board was well aware of it and
Yes.
we knew it was all resolved and everything,
Yeah.
but we were aware of it.
Yes.
Yeah.
And Tracy has since implemented procedures to get certified mail receipts so that we can verify that, which is a wonderful procedure.
Yeah.
So,
Yeah, Tracy's been very responsive and very helpful in this audit, I will say. We appreciate your entire team's responsiveness in assisting with this audit. So that is why there is penalties and interest accrued in the current year. moving on to the next page, the summary and status of prior audit findings. I'm not gonna go through these in too much detail. This is what was reported to the board last year. Noting that last year there were issues with expenses and payables not being recorded. We have not removed this because all findings that were found last year will be recorded this year. Next year, anything from this portion of the report that's not in the 2024 findings will fall off. So a few similar issues between 23 and 24. We acknowledge 24 was a year of transition, and the organization has been working on fixing these issues. Last year, there was also an issue with timely remittance. So as Taylor said, that is something that Tracy is actively putting procedures in place to take care of. Taylor's gonna go through the report to the board. We don't have to read every paragraph, but we will give you the general gist of the report, and please stop us if you have questions.
So the smaller packet, the report to the board, this is just required communications that we have to let the board or committee know. It starts off with our responsibilities. A lot of these are kind of mentioned in our audit opinion. But basically says that we initiate our engagement back in September when the engagement letter was signed, and then goes through our process and how we plan to perform the audit and the guidelines that we're following, the generally accepted accounting principles. Next page, our planned scope and timing of the audit. We complied with any ethical requirements that we remained are independent of the entity. It goes into significant accounting practices, significant accounting policies. This would be note 1 in your financial statements. It would say if there was any new policies or procedures that would be adopted, we'd bring your attention to that. For example, if there was a new regulation that had to be adopted by all entities, like the lease accounting standard a few years back. There were no new policies in 2024. The significant accounting estimates, if there were any, for example, the useful life of fixed assets. However, as you don't depreciate your fixed assets, there is no estimate related to that. So there were no significant accounting estimates that the entity had. Corrected and uncorrected misstatements. So this lists out that management will correct any misstatements, but it just kind of lists any adjustments we made during the audit. So the unadjusted net assets when we started was 2.3 million, and then after all a net income of 2.3 million, and then at the end of the audit, once we were done with any adjustments, was a negative 250,000. Just wanted to point out specifically the disposal of sewer project of 1.9 million. We knew that adjustment was coming. That's not a surprise. Tracy had reached out ahead of time and said she was not sure how to record that entry and specifically asked for us to wait during the audit to do it. So that was not a surprise that income dropped 1.9 million relating to that write-off of assets.
Of the entries that you'll see here, you'll look at, and you may say to yourself, $57, why am I even looking at this? As Taylor said, this is us listing out all entries that were made during the audit to get you from your unadjusted to your ending balance. Tracy is very dedicated to making sure that your books are correct. So if we found something that we said, you know, this isn't really material, if you want to run it through, fix it in 2025, that's fine. And Tracy said, can we please make it exactly correct? So that is why there's this number on here.
So just an adjusting entry does not mean correlate to a finding necessarily. So just want to point that out. And then that being said, so there was no entries that were not posted, no uncorrected entries. Judgment about the quality of accounting principles. This is basically your policies in note 1. We do review those and make sure that they all are reasonable and comply with auditing and accounting standards. No difficulties encountered during the audit, no disagreements with management. We didn't consult other accountants, no other matters, no material errors or fraud.
We already discussed the non-compliance, so we don't necessarily have to go through that a secondary time.
And then the management representations, once we are finished with the audit, we do need to do we have been doing subsequent event testing just to make sure there are no additional disclosures required for the financial statements. But once these financial statements are approved and dated, we will obtain a letter from management that just basically states that they have given us all the information they have and that everything they have given us is correct, complete.
The next section of this packet is the internal control section. In a financial audit that's not governmental, this section is where you would find any findings, management corrective suggestions, material weaknesses, etc. We've covered most of the information in this section already, being that it has to be covered in the governmental section that is in your financial statements. I will flip through quickly just to make sure that we've covered everything. We discussed your revenue recognition related to the granting. We discussed the accounts payable. You are aware of the legal fees that were prepaid that they are working through. So that's the end of our written report. I do just want to make one comment or recommendation relating back to those checks. The timing of pilots going in and out. Like we mentioned, the organization is making corrections and strides to make sure that those pilot payments go out timely. One recommendation we do have, obviously back in the beginning of the year, there were some issues that had to be worked through. The November, it was 4 days, not the end of the world, still a compliance matter. But a way to prevent that in the future, we are recommending that management they have already established a spreadsheet that notes when these checks are coming in. So they know when the clock starts for that 30-day timer, when they have to go back out. If the current process is that checks are being cut at a board meeting, our recommendation is that if the board meeting is a week or more within that cutoff, that a special trip be made to have the checks signed to go out the door, separate from the board meeting, just so you're not really under the wire there. So if the board needs to approve those, it could be done via an email. If that's not a required approval, then someone can just make the trip to get the check signed earlier, so it goes out the door timely.
Can't the board just have a resolution the month before that approves those checks to go out?
That will board to do that.
That's what I would recommend.
So depending on how the board resolution looks, if the board resolution says we had X dollars come in, therefore we are approving X dollars to go out. If the next day you had another 600,000 come in, that 600,000 could be excluded. So it's just how the board words that to make sure if the board resolution is just, we approve the dollar value of all payments that came in between this date and this date to be dispersed, then that would take care of it. Great. Okay. That concludes our report. Does anyone have any questions for us?
Thank you.
Thank you for your time.
Thank you.
All right, we will be sending a management representation letter to be signed prior to issuance. We'll get it wrapped up and we'll be in touch.
Thanks.
Thank you.
Thank you.
Thank you.
Thank you.
Is there anything else? I mean, are we presenting to the full board? How?
You kind of just did.
That's what I wasn't really sure. I said, how would you like us to approach this? So,
If the full board went, then the state and present us again.
so you guys kind of came in right at the findings part, so.
And that's the important part.
hit the highlights.
Yeah.
They said they're great.
I'll make a motion to adjourn the audit committee.
Second,
Second.
all in favor? Aye. Thank you very much for coming.
Thank
Appreciate
you.
your
Thank you so
time.
much.
Have a great day.
Thanks.